Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Friday, and it's July 17th. Happy Friday to you all. I hope you guys got great up-and-coming plans here. Hey, we have a few economic news releases to go over today, and we'll start off with the housing starts for the month of June. So, if you recall back in May, we had 1.07 million. Forecast supposed to go up to 1.11 million, and it exceeded that 1.17 million. A lot of this is like apartments and townhouses, new construction on townhouses. So you're seeing the bulk of these are being like the multi-unit type of properties they're seeing up there. Building permits for the month of June. We had 1.25 back in May million, and we had forecast it's supposed to taper slightly down to 1.18, and actually went the opposite direction, 1.34. So good overall numbers for the housing numbers here. We got the CPI, the inflation numbers on the consumer level. So the headline numbers are 0.4% back in May, and forecast at 0.3, came in at forecast. When you strip out the food and energy, which is really what we look at because it creates a little bit of volatility, we get the core CPI. So May we had a 0.1%, and then so for the month of June, it came in at forecast at 0.2%. And then consumer sentiment. This is a survey brought to you by the University of Michigan. And the first reading came in at 96.1. The forecast was at 95, and it actually dipped a little bit lower. So people weren't feeling as rosy as they were earlier, but probably a lot of stuff with the negative news with the Greece and everything else going on. That maybe that was what was bringing in the moods a little bit lower. Stock market's a little mixed today. The only one that's up right now is the Nasdaq a little bit. A lot of this is being played more by earnings. You know, Google and Facebook have some really good earnings, or Google, excuse me, not Facebook. Google and Netflix had some really good earnings reports. So right now the Nasdaq is what's on fire right now. Bond market, we're up a little bit from where we left off yesterday. As you can see, we are above the 10-day moving average. Yesterday we kind of were right at the 10-day moving average, tried going above it. Today we opened above it, which is a good sign, but as you can see by the cross there, it's kind of going back and forth. It's kind of dipping below it, up above it. It's trying to figure out which way to go. So if we can stay above that, it could be a good sign for us to start moving upwards, which would help out interest rates. So there's a slight improvement in interest rates from yesterday, as yesterday we even had price improvement. So if you look at from the week, from where we were all the way down from like 102.18ish all the way up to 102, almost actually 103, we had almost 100 basis points, which translated to 1 point in savings or improvement in our in the interest rates this week. So this week was a pretty good week in terms of movement here. As you can see, we had pretty much 5 consecutive days of upward trend. So good days, good to see, and hopefully we'll see more of these maybe next week. All right, folks, you guys have a wonderful weekend, and we'll look forward to see you guys on Monday. Thanks so much for watching. Take care.